While retail investors have panicked over this descending channel, smart money has been quietly accumulating near protocol for the next major AI expansion. We are currently staring at a data-backed potential 500% setup on the weekly chart, yet the social timeline is filled with extreme fear. Near is trading around $1.30 to $1.40, grinding downward inside a multi-month structural correction. It's pushing average retail investors to the point of absolute capitulation. But under the hood, this network is quietly processing massive institutional flows and building the exact infrastructure required for the incoming AI economy. In the age of autonomous AI agents, fragmentation is a systemic failure point. Crypto has largely replicated the broken, siloed systems of traditional finance. We have disconnected payment rails, fragmented liquidity, and highly vulnerable bridges. But the Near ecosystem is building the unified stack to solve this problem right now. Today, we are breaking down the verifiable hard data. We will cover their fully unlocked tokenomics, the live fee switch, and the staggering user adoption metrics that completely defy the current market crash. Then, we are going directly to the weekly chart. We'll establish the exact technical invalidation levels, our specific target zones representing that 500% upside, and exactly how I'm structuring my own capital on Near for the next 12 to 18 months. Let's look at the data. Let's establish the macro environment before we dive into the granular on-chain data. The current price action is brutal for anyone caught over-leveraged in the market. We are sitting below $1.50, representing a severe drawdown from the cycle highs of $8.25 we saw back in December of 2024. Market sentiment is suffocating in peak fear. People are exhausted, writing off major Layer 1 protocols in favor of short-term gambling. But as a yield-focused, data-driven investor, you have to understand that this is exactly the kind of environment where generational, risk-adjusted returns are engineered. You don't build wealth buying green candles in a euphoric market. You build it by identifying systemic value gaps when the crowd is looking the wrong way. That is exactly why smart money is buying this crash. Why does this specific Near protocol setup matter right now? Because the infrastructure for AI and crypto intersection is maturing rapidly, and capital will inevitably rotate back to the foundational layers that can actually execute these complex transactions at scale. Retail sees a bleeding chart and screams capitulation. Institutional capital sees a massively de-risked entry point for a protocol that already has a captured user base. But there is something in the foundational on-chain data that changes this picture entirely, making the current valuation look like an aggressive mispricing that the smart money is exploiting right now. To understand where the price is going, you have to understand what the smart money is actually accumulating. The pedigree behind Near is unlike almost anything else in the crypto space. Near AI was founded in 2017 by Alex Skidinov and Ilya Polosukhin. Ilya is a former machine learning researcher at Google who literally co-authored the foundational paper, "Attention is all you need." That's the exact architecture that gave birth to modern large language models. They are not pivoting to AI for hype. They are the original architects of the space. This vastly de-risks their execution capability for institutional investors looking for a legitimate AI crypto infrastructure play. The primary thesis here is that the agentic economy requires open, interoperable, and economically sustainable infrastructure. Near Intense is solving this cross-chain interoperability today. It's currently the fastest-growing cross-chain infrastructure in the industry, processing over $14 billion in all-time volume. We are talking about 1 million transactions per second with 600 millisecond block times. This allows users to swap assets across over 35 different chains with a single click. They are taking the brutal complexity of crypto, abstracting the bridges and gas tokens behind a seamless interface. But here is the critical catalyst that sophisticated capital cares about: confidentiality. Confidentiality is a mandatory requirement for institutional capital to flow on-chain. Whales cannot execute massive trades on highly transparent chains without predatory bots front-running their orders. Near has natively solved this through trusted execution environments. You can now trade without anyone knowing what assets you have or what you are trading. This unlocks a multi-trillion-dollar total addressable market of institutional flow. Furthermore, they are actively building the distribution pipelines for this capital. Brave Wallet just integrated Near Intents, bringing cross-chain capabilities to their 110 million monthly active users. Additionally, the token is now available to trade on Robinhood Crypto, including the heavily regulated state of New York, granting them strict regulatory validation. Now, combine this utility with the protocol tokenomics. The token supply is fully unlocked. There are no massive venture capital cliffs waiting to dilute your holdings. They have activated an on-chain fee switch, and buybacks are officially underway. Quarter 1 financial data from ecosystem applications like Ria Finance showed over $800,000 in total fees, executing actual token buybacks. Despite the bearish chart, the user adoption data is astonishing. Near Protocol is currently the second largest Layer 1 blockchain globally by active users, boasting 43 million monthly active users. They control 20% of the entire Layer 1 market share. They also hold the 7th spot globally for decentralization, with 131 million unique token holders. Yet their historical revenue market share is only 0.2%. The users are already captured. The monetization levers were just activated. The network is now accelerating a deflationary flywheel. Now let's apply that fundamental data directly to the weekly chart to establish our execution strategy. Looking at the macro market structure, the trend context is incredibly clear. Price has been trapped inside a descending channel, marked by the orange dotted lines, since the end of 2024. We are currently hanging around the middle part of this channel. 2 months ago, the price came down and perfectly touched our primary support zone at 85 cents. That was a critical liquidity sweep. Right now, around $1.35, we are attempting to break above the midline of that channel. We face heavy structural resistance directly above us. We are currently trading below the 21 exponential moving average, which is the red line on your chart. We are also suppressed below the 200 simple moving average, the green line. Until we reclaim those moving averages on the weekly time frame, the macro momentum remains technically bearish. This is why retail is scared, but it is also exactly why the opportunity exists. For our Fibonacci levels, we anchor our swing low from August 2024 at $3.10 up to the cycle top in December 2024 at $8.25. The immediate resistance zone sits at $1.70. This level is highly confluent because it aligns exactly with the 1618 Fibonacci extension and the upper descending channel resistance. A weekly close above $1.70 is the trigger that confirms a true trend reversal. Looking at our momentum oscillators, the Heikin-Ashi RSI located below the price action shows an extreme oversold reading on the weekly time frame. However, it has just started to point upwards, signaling that the bearish momentum is getting exhausted. When this indicator turns from extreme oversold on a high time frame like the weekly, it historically precedes major structural rallies. Here's my exact position strategy. I was making very small, disciplined, dollar-cost average buys inside that green box, my previous load zone between 85 cents and $1.20. I'm personally not accumulating any more at current prints, as it's outside my strict accumulation criteria. If I were currently flat and looking for a new entry, I would wait for the Heikin-Ashi RSI to hit an oversold condition on the conservative daily time frame, or I would wait for a confirmed channel breakout, entering on the retest of that upper trend line as new support, placing a tight stop loss below it. For a short-term trade right now, I would use 90 cents as a hard stop. A weekly candle closing below 90 cents invalidates the immediate setup. But short-term trading is not my game here. This is a re-accumulation phase for my long-term bag. My investment horizon is 12 to 18 months. My take-profit targets are clearly marked by the green circles. Target 1 is the 1618 fib at $1.70. Target 2 is $3. Target 3 is the 0618 fib at $4.50. Target 4 is $5.70. Target 5 is $8. Going from our current price of $1.35 back up to that $8 level represents roughly a 500% move. Target 6 is $11, and my ultimate macro target is $17. My risk management is systematic. I use a trailing stop methodology. If the price achieves target 1 at $1.70 I'll move my stop loss up to my entry. When target 2 is achieved, the stop loss moves to target 1, locking in guaranteed yield. If the macro environment collapses, my absolute bearish invalidation target is 63 cents, aligning with the 2618 fib extension and the original launch price in 2020. But I'm definitely not selling in this peak fear. I'll hold until we see an overbought scenario on the weekly Heikin-Ashi Relative Strength Index indicator. When we synthesize the massive fundamental adoption with this exhausted technical structure, the game plan becomes incredibly clear. The risk-to-reward ratio here is highly asymmetric. The worst-case scenario implies a potential drop toward that 63-cent invalidation level if the broader market capitulates. But the upside potential, driven by a fully unlocked token supply, an active fee switch, and the integration of institutional-grade confidentiality, points toward a massive repricing event that aligns with my 500% setup thesis. My timeline considerations remain strictly focused on the 12 to 18-month horizon. You cannot expect a protocol of this massive scale to turn around in 3 days. We are waiting for the fundamental value capture to reflect in the on-chain revenue, which will inevitably drag the price action upward. The only thing that would fundamentally change my thesis is if the network starts losing its 40 million active users, or if the developers abandon the near-intense cross-chain infrastructure. Until the data changes, I'm letting the chart decide the pacing, relying on probability-based thinking rather than emotional reactions. So, real quick, to recap my thesis, Near Protocol is currently trading at a massive fundamental discount compared to its actual network usage and technological pedigree. The technical chart shows an exhausted downtrend ripe for a reversal, provided we can break and hold above the channel resistance at $1.70. The asymmetric upside of providing the execution layer for the entire AI economy is simply too large to ignore. Smart money is buying the crash because they are looking at the data, not the emotions. The market is a mechanism designed to transfer wealth from the impatient to the patient. You don't beat the market by reacting to daily red candles. You beat it by identifying the underlying liquidity flows before the crowd catches on. If you found value in this data-driven approach, hit the like button and subscribe to the channel. It tells the algorithm that real analysis still matters in this space. Now, for those of you who want to move beyond watching videos and actually see my real-time execution, I invite you to join the Pro Capital Vault. This is my private Discord community, accessible exclusively through the YouTube members program on this channel. It's built for serious position traders who want direct access to me, my exact buy and sell zones, DeFi plays, and our weekly live strategy calls. Just click the join button below this video, use the link in the pinned comment, or scan your screen to step into the war room. Once you join, just sync your YouTube account to Discord to automatically unlock all the private channels. If you want a deeper dive into the specific tokenomics of this network, make sure to watch my last video on Near Protocol right here on the screen, as it seamlessly continues this exact analysis. Please remember, everything discussed today is for educational purposes only and is not financial advice. Much love for watching, protect your capital, and I'll see you in the next breakdown.